Good evening, everyone. This is Tim Knight, broadcasting to you from the west coast of the United States, and it's Monday, the 2nd of November. And first, I wanted to start off with this amazing equity curve. I'm sure most of you probably recognize this. This is Sol's performance graph from over at X-Trends. I guess they call themselves X-Trenders now. And I wanted to say a couple of things with respect to this. First, I don't know Attila or Sol. I've never talked to them on the phone. I've never met them in person. I've exchanged with Attila a few emails. But I've always liked those guys for a few reasons. One, they're very technical. Two, they use profit charts, which is my first child. Three, and this is the big one, they have shown grace and courage in the face of a lot of derision over the summer months. Just an astonishing amount of bile. And they really didn't let it get to them. They kept the site going. They kept producing their views. And as you can see here, and this again is Sol's performance graph, he took nearly a 50% hit on this, losing more than most people ever see in their lifetimes. And roundabout here, I remember that he kind of emerged and recognized how bad things were going and said that things were even worse because he had started a restaurant venture, and I guess that didn't go well and so forth. But he kept at it, and as you can see, and this is borderline science fiction, but he does a good job of keeping people posted on his trades. Now you've got this kind of incredible hockey stick. And the cool thing about this is that he could really screw up and lose $2 million and still be in incredible shape. He has a lot of room for error at this point, which is a very happy place for a trader to be, because when you're confident and have a lot of cushion like that, you can be more bold. They don't trade like I do. I don't have this kind of profit, I can tell you that much, but they don't trade like I do. They make amazingly big, bold bets. Sometimes they blow up in their faces, but lately it's been just maybe they'll save the country. They'll pay off the national debt once they're done. So just hats off to those guys. Thank you, X-Trends, for being on the web and being so strong in the face of your critics. You're laughing all the way to the bank, I guess, as they say. Another tidbit I want to show is something I spent a chunk of my Sunday working on. It's no accident that I've hidden part of this, because I, for a variety of reasons, really didn't want to show the whole game plan. Main reason being that the people that I sort of am obliged to serve and perform for are a different group than my readers. I love my readers, but this is a free blog, and I just, it's just not right that I should just open the kimono up all the way here because I've got obligations to others. But I will say that this, and I did this on November 1st, this is the first little tidbit of what I perceived was going to happen. My little chicken scratching here, I had the market, and when I say the market, I'm talking about the ES, the E-mini S&P, the market going up to about 1050. You can see my little about 1050 sign. And the market's high today was 1049.50, so if that holds, yay. And then subsequently a dip down to 1005. And obviously, I mean, the lines drawn here are just straight little rule lines. I don't really expect the market to plunge 45 points instantly. These are kind of targets. And this is a very big week because there's all kinds of things going on this week. There's the Fed announcement on Wednesday. There's a jobs report on Friday. There's consumer confidence tomorrow. I think there's a lot of activity this week that'll push the market here and there. And as you can divine from this line here, I do expect a pretty hearty rise after that. So we'll see how that goes. But I've got this taped to one of my monitors, and I just sort of keep it in mind because when I do these roadmaps, in the last one I did, the last big one I did was October 18th, 2008. So I guess autumn must do things to me. It's been about a year since I've really done this. I should stick to them. Sticking to my October 18th roadmap would have served me very well. So I'm going to try not to ignore myself again. Now, as far as the more immediate stuff, let's just look at a few charts. First, this is the euro, and the trend line that I've drawn here is very important, and it has not been broken yet. That's important to keep in mind. If and when it is broken, I say if, it will be broken at some point, no matter what happens. Obviously, it will at some point. But when it is broken, especially if that's pretty soon, that'll be a real boost to the bears. Because all the excitement last week was just from this little dip and didn't even break the trend line. This drop was a lot of wind in the bear sails. This pop here, which I think was on Thursday, gave us a new opportunity to increase our exposure. And then the dip again on Friday was lots of fun. And then today we had a rise and a fall. So it's really wiggly right now. A push above this level at 1.4866 would be good news for the bulls in the short term at least. This is kind of the line in the sand. And so I'm watching that line quite carefully. Adjunct to this, of course, is precious metals. Gold has been stronger than the euro, which I think the gold bulls can take to heart. As usual, when I mentioned today that I was short something to do with precious metals, one of the gold lunatics came out and started ranting at me. I'd really be safer talking about religion, honest to God. So I get in and out of GLD and GDX a lot, and it's not meant to be offensive to you precious metal worshippers, but it's just a trading opportunity, and those trades went well today. I have a small GDX short position right now. I wouldn't be at all surprised to get taken out of it. I'm not frothing at the mouth bearish about this, but it's okay. But yeah, the precious metal stuff I get into and out of a lot. Now the all-important VIX here, let's take a quick peek at. VIX had a huge surge last week, a little too far too fast, I think. I think it would do a lot of good to ease back to the mid-20s. It went back a little bit today, but kind of overshot itself. But this is going to be a very important indicator for us in terms of sustaining the downtrend. And in general, and I've said this repeatedly, but I'll keep saying it, I think that unlike last autumn where you had panic and terror and 700-point moves in the Dow, I don't think we're in for anything like that, thank goodness. I think that the motion downwards will be a little more predictable compared to last autumn, at least. And so that's why I'm pretty confident in my roadmap here in terms of the guidance it can give me. And our old, perpetually important friend, the ES, the December, this trend line here, unlike the euro, was broken, and that was vitally important. It broke and did a wonderful retrace to the underside, and it's been sort of lurching away from that. And today was sort of interesting too because we got that little pop to the aforementioned 1050 area, and it dropped away again, and actually got lower than Friday today, and then surged higher. So there's a lot of tug of war going on right now. I don't know day to day what this week holds for us, but I'm pretty confident that my view is that by the end of this year, the bear is going to have plenty to celebrate, and I'm positioned accordingly. I bought a whole bunch of UWM, the Ultra Bull Russell, near the end of today, as I did Friday. I got out of that position this morning at a small profit. It was okay, not much, but it's kind of an insurance policy for me because I'm kind of shorter than, think of something very short. I'm shorter than that right now. Nothing clever springs to mind. All right, well, that's it for Monday. I'll see you on Tuesday. This should be a fascinating week for all, and good night.